Your initial views here on this stimulus blitz?
Yeah, we really think that China policymakers went above and beyond expectations this time. Sure, some of the interest rate cuts, triple R cuts were expected, and actually yesterday markets were kind of giving back gains in early trading before the real surprise, which was the PBOC facilities for stock purchases. So a couple of things stood out to us. One is that, policymakers are finally realizing that drip Fed stimulus was not working and that they needed to come out with a big jolt. Second is that, the national team support that we've been tracking all year is now officially sponsored by the PBOC. So, the central bank is telling financial institutions, corporates to borrow from us, leverage up to invest in the stock market. So the market does not need to question if, the national team is in play anymore. So overall, I think these measures are some of the broadest and most direct that we've seen. Yeah.
Big question, is it going to last? I mean, some say this could be just a technical bounce. What separates that from being something more structural?
Yeah, I think we're going to be on a sugar high for a while, particularly given that the Fed and PBOC are finally on the same easing cycle. Valuations are going to move first. And for China, single-digit valuations have quite a bit of room to go before kind of reaching that 5-year average of 11 to 12 times. For sustainability, it will come down to the data showing improvement on we need to see improvement on consumption, housing sector activity, and deflationary pressures ease. And if we get that, we think that the setup it would be a pretty good setup for stocks going into 2025.
Right. There are the elections, of course, and geopolitics, which we can get to in a moment. But, Stephen, I'll bring you in. In the meantime, the sugar high, the sugar rush has taken dollar China below 7. Is there a lot of momentum behind that move? Can that continue?
Yeah, I mean, we have to distinguish whether the latest bazooka, as you said, will really help the economy. We'll leave that to the economists, but at least for China, it's always sentiment. China's stocks, Chinese currency, it's always sentiment that drives the near-term movement. So as you can see, the offshore yuan actually tests 7. Now it has rebounded, but now at least it has broke through the 7, the highest level since last year, basically. And onshore yuan, it's a matter of time that it's going to break 7 again. As Marvin said, the Fed has really helped as well. PBOC also delivered a lot of stimulus. So the currency, actually, the direction will be intact. Of course, how fast the yuan will rally will depend on how the PBOC will let it. Now, if you look at the basket, interestingly, it's actually not that strong. It's still at 98.5, which is somewhat stable this year, meaning that there could be a lot of room for the dollar yuan to drop from here.
But you're saying there's still some cracks that we have to look ahead to. What does it look like post-U.S. election when you have to talk about trade wars once again?
I think beyond all this stimulus hype and also beyond the U.S. election, obviously the top risk is the U.S.-China relationship because we don't know who is going to win. If Trump comes on, obviously there could be a U.S. trade war 2.0. But even if it's Kamala Harris, we know U.S.-China relationship is just going to go south because of obvious reasons. So that could be a risk premium that's yet to be priced in the yuan. And of course, at some point, people will look at whether the Fed will cut all the way below 3% next year. If not, then the Fed rate cut path will have to be repriced. That will support the dollar. So from the dollar front, that will actually sort of slow the yuan rally as well.
We're counting down to the U.S. elections, as Stephen was pointing out. Marvin, geopolitics, when does that kick back in and remind these equity markets that there is something to talk about there?
Yeah, I think, with the stimulus, the big announcement yesterday, the question becomes, has all this easing been front-loaded ahead of the U.S. elections? And if we do get more tariffs, does the Chinese policymakers have more firepower? And, we think that, it remains to be seen, but the external risks are definitely there. But we think that, with this recent strengthening in the yuan, and if the Fed continues to ease as expected, there is room for more policy easing going forward. And I think that sentiment was kind of reflected in the announcement yesterday when some of these measures were hinted that, they can be extended if necessary.
What is it? We saw a lot of momentum in the equity market kind of take some wind away from the bond rally, right, where CGBUs actually rose on the back of this announcement. Has all this been priced into the bond market, and should we find a floor for yields now?
I think CGBUs, especially the 10 years, sort of rebound from record lows yesterday, which is quite counterintuitive because it's like a massive stimulus, rate cuts, triple R cuts, and even forward guidance for more triple R cut before year end. So you would have expected yields to drop lower. But now that tells you that China, after all, is an EM market, so better sentiment will actually sort sort of help yields. So the growth story, at least for now, is baked in. So people expect recovery in the property sector, in the real economy, and hence 10-year yields, which reflects the macro sentiment, actually sort of rebound from here.
Very quickly, final thoughts, Marvin. How do I position in the equity markets right now?
Yeah, so similar to the Fed easing that has broadened out the U.S. market from the Mag 7, we think China easing will kind of broaden out sector performance. So this means we're looking at some of the laggards, consumer staples, healthcare, and real estate. And also it means that we think that A shares can narrow some of the underperformance to offshore listed stocks going forward.